Good morning, and welcome to the Rick Helps Real Estate Show. Today, we're going to do a little diving into the Phoenix market, and we're going to talk about what real estate agents think 2025 is going to be like. They did a little survey. They didn't ask me the question, but they ran with some numbers and asked a few questions of people in the industry what they think 2025 is going to be like, and I'm going to share that with you now this morning. And here we go. So look here. Right here it says, here's our prediction survey. Do you think your 2025 numbers will beat your 2022 numbers? And 84% said yes. We are always an optimistic bunch. We look and go, man, it can't be any worse than last year. So it's coming true to form, saying we're going to beat last year's numbers. Are you planning on changing brokerages? 19% said yes. 81% said no. Good morning, YouTube. Hope you're having a great day so far. That I think is probably pretty average. 19%. People switch brokerages all the time. Do you think interest rates are going to drop in 2025? This one I think is too optimistic. 81% said yes. 19% said no. I'm in the no category. We're expecting a Fed reduction tomorrow of about 0.25, and then the bond markets have already priced that in. And you can see that mortgage rates are 6.93 this morning. So they're going to come out with a small cut. Nothing's going to move after that. We're all waiting to hear what they say. And, inflation isn't coming down as fast. It's pretty easy to get from 9% to 3%, but getting from 3 to 2 is turning out to be more work than anybody anticipated in that arena. And we're seeing that. So I don't expect rates to come down, especially do not expect rates to be below 6 in all of 2025. And they didn't ask me in this survey, but I don't think January, February, or March is going to live up to anybody's expectations as far as buyer volume. Now, I say that, and yet you look down on the ticker down below, and you'll see that new contracts are pretty resilient considering the time of the year. We're sitting down here, our current active listings right there are 20,717. They're dropping because they're getting closer to Christmas. New listings are only around 2,000. New contracts are 2,339. We've been average about 24 to 2,500 every 7 days. So having new contracts at 2,300 this time of year is kind of surprising to me. So if your house is still listed, hang in there because serious buyers are still out there. Other news going on in the market is talking about multifamily. I found this article and I thought it was very interesting. And they're talking about top 10 performing markets in 2025, including available inventory. And they're talking about the Phoenix multifamily, which we've been worried and considered that, we're kind of overbuilding, right? So this gentleman here, Andrew Turley, president of Phoenix Valuation, said, Phoenix performs exceptionally well in job growth, net migration, and attracting movers from out of state. As Phoenix continues to balance its affordability concerns with high-end growth, the city remains poised for sustained development. Its expanding commercial real estate sector, strong job creation, and strategic positioning in key industries ensures that Phoenix will remain a magnet for investments going forward. Now, there were some numbers down here that I found. They're going to quote 72 sold. I'm probably not going to jump in on that one. But basically, they're saying that the multifamily market is filling up, and commercial real estate is not doing too bad. So here's the article on multifamily that I was looking for. It said here, there are nuances for investors to consider within each asset class. In multifamily, for example, the Phoenix market absorbed 66,000 new apartments between 2019 and the second quarter 2024. JLL data indicates nearly 24,000 units are planned to be delivered this upcoming year. Pricing is down approximately 25% year to date if you were to buy the entire complex. That's the pricing they're talking about. Multifamily rental rates are flat, and we're seeing an increase in concessions. So they're not seeing a huge drop in rental rates, but they're seeing a 25% drop in the cost of buying the whole building. So that means from an investor standpoint, there's a flight to quality. He said most investors, even if they've been in the market, are looking to upgrade locations to a newer property because they usually have fewer capital demands and they are easier to insure. So they're saying that the rental market, if you're an investor and you're looking for apartment complexes, especially high end, seems to be holding its own. It's doing pretty good. And there was an article out too, which was the one I referenced here, that said that the Phoenix market, this is right, I should show it to you when I say that. Phoenix Metro named top 10 I can't talk this morning, 10 top housing hotspots for 2025, realtors say. So let's look at that. Let's take a look at what's going on in Phoenix. The average sales price per square foot has gone up a little bit. We had this little dip back here in 2023. That's when rates first escalated and all the iBuyers were dumping their inventory. So it's pretty flat. Gone up just a little bit, has not come down. So any sales numbers that you see today were contracts that were written in November. And if you look at the Cromford Market Index just for Phoenix, it still is in the advantage for sellers versus buyers. And it's sitting there at an index matching last year's numbers at 118.8, where the rest of the market is down in the 80s. Phoenix as total is still a seller's market. This is the listing success rate for everybody. We're seeing here it's 66%. That's below normal, but guess what? We're in the holiday season, so you expect that to drop. But let's just filter this out and just put in Phoenix and see what we're looking at here and see where they're at as far as you're listing out your house. Are you going to sell it? What's your success rate? And it is right there with everybody else at about 65%. So it's not sticking out better or worse. And you can see that just constantly week after week goes up and down, up and down. The active listing counts right now for Phoenix is sitting at about above last year, but not by much, though above 2022 levels, considerably above 2023. So we had 2,383. Now we have 3,333. So they do have more listings. That's why prices are kind of flattening out, but nothing spiking alarmingly. All of them are going to be going down as we get closer to Christmas in the next 2 weeks. This is the listing success rate again by calendar month. That's pretty much the same information I already shared for you. Here's the Cromford Market Index right here. Let me make this a little bit bigger. And it's showing you the entire market. Now, it's showing Phoenix here again at, let's see, where's Phoenix? 117.5. It went up 4% last week. The comment section that the Cromford people have here and below says, and this is whether you can question it or not as we go forward. Remember, I'm not expecting a dynamic January and February. I think the level of sales that we have going to stay kind of around 2,500 while inventory starts showing up because first of the year. That's just me. The market has stopped cooling, they said. We have 8 large cities showing an increase in their Cromford Market Index over the past month and 9 showing a decrease. Well, and it says, of course, Maricopa is the worst performing, losing 9% over the most recent month. And the outlying areas where there's a lot of new builds going on are getting their butts kicked. While it says that the cooling has stopped, I just can't help but look back and go, I don't think our numbers right now mean anything because of the holidays. So I look at it with a little grain of salt and say, okay, that's interesting. Let's see what next month does, because it's just going to do this. But I am surprised that we are still seeing the number of contracts that I'm seeing, and despite the fact that mortgage rates now are sitting here at 6.93. Now, the Federal Open Market Committee meets tomorrow on the 18th, and you can expect Chairman Powell to get up at the podium and say, we have decided to go down 0.25. They're not going to go down 0.50 because the inflation data is not, it's just staying flat. Jobs still growing. So they're concerned, if you lower rates too fast, then you're going to see inflation come roaring back. But there's a lot of bond vigilantes out there right now. So the bond market is just saying, well, we're not there with you, Jerry. We don't think inflation is going away. So we want a better return on our bonds. They're buying 10-year treasuries and they want a good good return if they're going to commit for 10 years, and they're not confident that inflation is being whipped. So we had this 0.75 cut, 0.50 and 0.25. Remember on September 18th, those people in the industry, like the same surveys that I showed you just a moment ago, were saying rates are going down in September. Central bank's going to lower rates. Mortgage rates are going to go down. The buyers are going to come out of the woodwork. So they went down between September and November, 0.75. We've gone up 0.75. So let that be a lesson that just because the central bank lowers rates does not mean that the bond market's going to play along and follow. And right now they aren't. China and Japan are not buying as many of our notes as they did in the past, but it's being made up by Europe. Europe is, so it's been a wash. They're buying a lot of gold in China and Japan instead of our treasuries. But Germany, France, England, they're scooping up what's out there. But there's a lot of them that have to be issued, especially in the coming year, because of the interest on our debt. $1 trillion now, more than national defense. So that's going to put pressure on rates. I find very few articles that say that treasuries are going to be less than 4.5, which means that it's going to be really hard to find a mortgage rate below 6% going into 2025, especially not January and February. That's why when I see these new listings coming on in January, if you're looking at listing, most people say, well, I'm going to put it off till the first year and I'm going to put my house on. Well, be smart about your pricing because you're going to have a lot of competition, folks. Not an alarming number. We're sitting there at 20,000 right now. We'll pop up to probably 24,000 in January, probably 26,000 by February. And I say that not because there's such a huge influx of new listings, but because that sales number is going to stay right there. I don't see any catalyst for that number to pop up. The number of people that are waiting, saying, I'm not buying until, they're not seeing anything that lets them say, okay, I'm going to jump in. I'm still hitting an unaffordability wall. I still don't like the rates. So they're going to sit on the sidelines until something major changes. And I think it's going to take all year until something major changes. Now, there's always a hiccup. There can always be a banking crisis. There can always be something else. What you want to watch is and see whether or not the central bank, it continues to tighten, called QT instead of QE. QE was when they were buying mortgage-backed securities like crazy and lowering interest rates. In other words, taking things from the banks and holding them on their books. That releases more liquidity. Therefore, rates go down. And that's what happened during the pandemic. They just opened up the floodgates, money like crazy. And now they're trying to reel it back in. And they want to do it without breaking anything. That's what they call a soft landing. And so far, seems to be working, but that can always have a hiccup here and there. But they're trying as best as they can not to reignite the market. And they're doing this overall with, looking at housing, but they're not really concentrating on, what kind of an impact is this having on house prices? They have two ways that they measure inflation, one with housing, one without housing. So long story short, don't expect mortgage rates to come flying down. I think we're going to sit at 6.5. Every projection that I've seen, I don't see anybody that's guessing. And I say guessing because all of these mortgage companies and National Association of Realtors, Realtor.com, Moody's, Bank of America, none of them are projecting below 6.1 for the entire year, even going into 2026. So the only thing that has the possibility of changing is affordability. Now, right now, we're seeing that our average sales price is not flying down. It is in some cities, most of the outlying areas like Maricopa, Buckeye, Santan. Pinal County is getting hit pretty hard. Pinal County is getting, which includes, Santan and Arizona City and places like that. I'm going to try and see if I can pull it up here. They're getting hit pretty hard. Mostly, here's the quarterly sales price in those areas. 371,000 actually went up a little bit. Median sales price for Pinal County. So they've been pretty much flat all year and went up a little bit. But the interesting thing is, it says that it's down from over 8% from the peak of 405,000 that was achieved during 2022. The bulk of the decline happening during the period from 22 to 23, and prices have moved a little higher despite a big dip 12 months ago. They mean right here. So they got slapped pretty hard and they haven't been able to recover much. When I look at our average list price that I see here in the valley, and I go below $1 million, from the beginning of the year to today, it's only changed by 71 cents. 71 cents higher, not lower. So people are listing and they're leaving it there. They're putting their list price out and saying, okay, well, I'm probably going to get asked for concessions, seller contributions. So I'm just going to stay put so that I can use some of my equity to give back to the buyer. Seller contributions are about $10,000 now. So if you're listing your house, price accordingly. Don't do I think I can pricing. Do I know I can pricing? I think I can sell at this means you're not going to. I know I sell, and you know what that number is. And boy, if I were to price at this, it's going to sell. Well, maybe it can go slightly higher than that so that you can have some equity that you can give for buyer concessions, because they're going to ask for it. So if you're listing your home, just be prepared for that. And we like to advise people that when we go on listing appointments. So if you're looking at putting your house on the market anywhere in the valley, we've got coverage all over here. I've got Ruby and Jackie in the West Valley. I've got Bryce and Stephanie in the Central City, and Jessica out here in the East Valley. So plenty of people out there to help. If you just want to get an idea what you think your wish pricing and your I know you can sell it pricing is going to be, just shoot us an email at rickhelps.com. But in the meantime, I will be back probably next week. We're not going to do a Thursday show. I'm going to wind down as we get closer to the holidays, but I will come up with breaking news. If there's a surprise by the central bank tomorrow, then you can expect me to be on to talk about it on Wednesday or on Thursday, usually around 3:00. We'll see what happens. I've still got a little bit more Christmas shopping to do. I haven't buttoned it up yet. Have my birthday weekend. My son came out from California and we got together and had about 20 people and had more food than I care to look at again in my life. Had a good time though. It was fun. Wish you were there. Anyway, have a great morning. Take on the rest of the day. Take care.